So good afternoon. Thank you for joining today's panel. We're very excited to come to you today. My name is Brendan Deacon. I am the Vice President of U.S. Sales for Provenir and a 25-year veteran of the credit services and decision analytics industry, predominantly supporting major global financial institutions from companies like Experian, Argus, and certainly now Provenir. Today's panel is titled The 2020 Digitization Journey. Is your roadmap still relevant, or is it now time to refocus your strategy for a post-COVID-19 world? I am joined by three very distinguished panelists who have decided to join us today and provide some invaluable insights into this topic today. And I'm going to ask each of them to weigh in here individually. And so welcome, Jessica. Would you mind kicking us off here? Jessica Liu from Capital One.
Sure. Hi, everyone. This is Jessica from Capital One. I'm now leading the product strategy analytics in the checking growth and the risk policy space. So I've been with financial services for 7 years, and my experience at the financial services covers the product, innovation, strategy analytics, risk management, and marketing. So very happy to join the panel today and exchange some thought about the new learning from this special time.
Excellent. Thank you, Jessica. Appreciate it. And second, Jonathan Klingler from TMX Finance. Jonathan?
Yeah, my name is Jonathan Klingler. I currently head up the credit risk department at TMX Finance. I started my career actually at American Express, working in their card portfolio, doing risk management. And since that time, I've been in the mortgage industry. I've been in the short-term lending space. I've worked with prime customers, subprime customers. So I've really had a bit of exposure to just about everything within financial services, but excited to be here today.
Excellent. Thanks again for joining, Jonathan. And last but not least, Rutger van Vassen from Informa. Rutger, please take a minute to introduce yourself.
Yeah, thanks, Brendan. My name is Rutger van Vassen. I'm the VP of Consumer Lending at Informa Financial Intelligence. At Informa, we help our customers, which are all financial institutions, understand how they stack up against their peers. So we track all types of lenders, types of financial institutions, and help our customers understand where they sit from a qualitative and a quantitative perspective. So we have a very good view overall of what's going on in the market, and excited to be part of this panel.
Excellent. Thank you. And thank you, all three of you, again, for joining us today. And also thank you to all the folks who are attending today. We hope you get a good deal out of this conversation. As we prepared for this discussion, the four of us all agreed that the COVID-19 environment is forcing FIs, financial services companies of all kinds, to reevaluate their digital journeys or digital strategies. So today's session is going to help us all try to uncover some of the key factors that are impacting digital strategies, whether it's acquisition or servicing strategies across the board, and help us all identify ways where we can either reprioritize some of those strategies or accelerate them, or in fact, find new ways that we can deliver value to our constituents in this industry through digital channels, especially as we start to exit this pandemic into a post-COVID-19 world. I think it's important to highlight that any gains that our clients can make in this area are really going to drive dramatic increases in client attrition, client attrition, improve customer satisfaction, and all while getting additional opportunities to engage consumers, small businesses alike that might be struggling during this difficult time. So very, very important topic. Now, before we get started, I do want to highlight a couple of housekeeping items. I'm going to ask each of our panelists to weigh in on every question that we ask. We'll go in a rotating order so that each of them get a chance to weigh in first. We are going to actually also allow the attendees of this panel to ask questions. So in the dialog box, you can see here on the application, if you have questions that come up during the conversation, please don't hesitate to type them in. We will reserve time at the end of our conversation to expand our discussion. So we'll do our best to address all the questions that are asked or categorize them so that we can succinctly get them answered in the short time that we have together. So with that, I think we're ready to go. And without further ado, we'll start the conversation. 2020 Digitization Journey. Is your roadmap still relevant, or is it now time to refocus your strategy in a post-COVID-19 world? So the first question I'm going to pose to Rutger, we know that COVID-19 has had a pretty significant impact on the financial services industry. And that ranges from the economic uncertainty that many people are facing today to dramatically changing payment behaviors and or credit utilization behaviors. As we look at where the industry as a whole stands today versus where it may have been, say, 6 months ago, is it time for financial services companies to rethink their digitization strategies? And if so, how should they be doing it?
Yeah, that's a great question, and it is a very important one, and the answer has almost sort of like changed overnight as we sort of swooped into this crisis. I think sort of a digital strategy has gone from a nice to have to a need to have, a must have, right? I think there were sort of like two categories of companies. First category that find themselves not very well prepared, right? That was sort of behind on their digital strategy, and they suffered dramatically, right? We're talking to a lot of players in the market, and many of them that didn't have a lot of digital strategy in place really told us, hey, this was really hard, right? Once everyone's stuck in place, to then not be just reliant on your branches, but actually sort of need some digital strategy there. And then the other group, which are the people that did have a digital strategy in place and were already sort of ahead of the curve a little bit, they really reap benefits from that, right? As everyone sort of locked down, and it was sort of scary for people to go in person to branches, taking a digital channel was the right way to go. And they also realized that sort of was positive for them, but that they need to do more. Because what we will see is a lot of customers that are in this stay-at-home crisis are sort of forced to go through a digital channel that normally would not have chosen that. And what I think is going to be very interesting to see is once we get sort of to the next level, will people change their behavior back to where they were, or will they stick with the digital preference? And that I think is very, very important to sort of understand that. Now, that said, I think it's also important to realize that being sort of locked down in sort of personal connection is very important too, right? So it's not that everything's going to go digital and we can just do away with everything sort of branch and offline related. I think that is still very important too. So finding a balance between the two, I think, is going to be really important.
Excellent points. Jessica, I'm curious, how is Capital One looking at this? How are you reevaluating some of the things that the bank is doing, and how can you weigh in on this question, this important question?
Yeah, so as Rutger said, Capital One closed a lot of physical branch. And we also know a lot of customers don't feel comfortable to come to the branch anymore. So you heavily rely on the digital channel to perform their transactions. So Capital One is already on the trajectory of digital banking services to enable the branch parity. So I think COVID-19 really accelerated the needs, especially in account opening and in money movement space. So we have a lot of different features to enable the customer to do it online. But we observe, we find that these two parts is the key. We heavily see when the customer want to open account to really receive the stimulus check. So account opening kind of volume really go up and heavily shift from the branch physical channel to the online. And then we already have industry-leading online account opening experience that allow the customer to open account in 5 minutes. So in the money movement side, it really have a high needs and kind of a requirement for the future experience. A lot of customers want to move money around and to and from the investment account with different purpose and needs, and to allocate their asset to the FDIC cap, and to receive the government allowance and the stimulus check. And also saying that we prioritize to make sure the customer have a great experience digitally. And then that's how we keep it our digitalization roadmap relevant.
Excellent, very good. And as a Capital One customer, I'm a very satisfied customer. So I'll just reiterate that, a little plug for Capital One. Jonathan, I know TMX is a very unique business and not very similar to Capital One at all. But how are you guys handling this question, given the unique nature of your business?
Yeah, so I think I come from it in terms of just the terminology of digitization, a little bit different from a channel perspective, right? So we are primarily a brick and mortar retail business. We have branches spread throughout the country. We do have a very small online portfolio that we manage, but the bulk of our business are customers that come through. And so, when you ask the question about, should we be reevaluating our digitization strategies? Obviously the answer to that is yes. I think that several companies had digitization initiatives that were probably in the works that probably either have been accelerated or have been reprioritized. A good example of a process that would benefit from digitization, we've talked within our organization about something as simple as the printing of receipts. Right. So after a transaction, what type of documentation or paperwork are we printing out and handing to the consumer? Well, is that necessarily something that during this time that we want to be handling, paper, handling something and then giving it to the customer? Or is that something that we can provide to the customer in a paperless or digital manner? And so those are some of the things I think we are addressing from a digitization perspective, because again, we're much more unique in the fact that we are primarily a brick and mortar business. So we have to find ways to automate manual processes that will benefit our consumers during this period.
Excellent. And just to reiterate, I do want to ask any of the attendees as we go through these questions, if you could pose questions to the panel, we'll get to them at the end of the session, but if you could just highlight the area that we're talking about at the time so that we can structure them appropriately, we would appreciate it. I'm going to move on to a different topic, and I'm going to ask Jessica to weigh in here first, especially given her role in innovation at Capital One. I'd love to get your thoughts on, certainly innovation means different things for different entities, different product lines, different divisions, even of the same business. From a digitization perspective, is there pressure to accelerate innovation within Capital One, or are you seeing more broadly pressure across financial services firms to innovate? And if so, what are the priorities in that acceleration or pressurization?
This is a great question. Can you guys hear me? Hello. Okay. I see some pause. So this is a great question. So I think in the past, we focused a lot on the customer experience innovation to catch up with the fintechs. And a lot of people think during this COVID-19 time, probably the innovation paused. But we see different kind of needs and priorities in the innovation space. So first of all, during this time, we see the customer heavily rely on the digital channel, and cybersecurity is super important for the resilience of the financial services business and the key factors of the customer trust. Right. So Capital One has already put cyber as a 2020 top priority, and I think now make it even more relevant. And there is a high demand on the tech stability. So with a larger amount of a transaction happening, how can we keep it stable? And it's really a question and also a challenge for our tech folks to keep it stable and running it as it should be before the COVID-19. So second thing, what I'm thinking is the shelter in place also changed how we work. So most of the employees work from home, and including the contact center agents. So we haven't thought about that before, that we close the physical contact center and allow the agents to work from home. So this really leads to increasing potential and operational risk, such as internal fraud. So the risk control and the policy in the physical contact center is no longer applicable to the virtual working mode. So the innovation in this area is really emergent, and we have to face and solve immediately. So last part that the company-wise, and I think the industry, in every industry is thinking about, from business strategy perspective, it's a great time to slow down the pace passively and really reflect where the opportunity is for the next phase of growth. The valuation of tech startups are cheaper, and it's a great time to reimagine what the financial services business model will be post COVID-19, after the economic get better, and we can take this golden opportunity to really kind of enforce our growth in the future.
Very good, very good, Jonathan. would love to get your perspective on this as well. Are there particular areas within TitleMax that you've had pressure to innovate faster than you might normally do because of COVID?
Yeah, I'll answer by saying that the pressure to innovate has existed for our team, particularly, really for the past couple of years, right? And so I think what's really changed is just the shift in terms of what problems need to be addressed by that innovation. For us, as a company, I think one of the biggest challenges is customers and their reluctance to come and visit our branches. We have a very hands-on customer experience, and that certainly presents some unique challenges. So for us, we've been challenged with, how can we make that very manual, white glove type of service in that process? How do we automate that? How do we get that so that it can be a very touchless, kind of a drive-through type curbside, approach to the way that we do our business? And so that's really where I think the demand within our organization to kind of shift priorities has really been centered. I also will echo what Jessica said. With employees working from home, we have call center employees working from home, and there really has been a big push to make that experience, even for our employees, a much more frictionless process than it otherwise would be.
Yeah, very good. That's certainly something that even here at Proven Ear, we were fortunately ready with a strategy to go remote, and we've been very successful. It's almost been business as normal, but that required a lot of planning. And so I totally get that a lot of companies may have been caught off guard by that and are now learning the lesson there for sure. Rutger, you have some insights because of your access more broadly to the industry in your role. How you're in here on the innovation question?
Yeah, so I think initially where I think things were focused on is where the friction was, right? And that's always a word that comes up when you talk about digital. Like, how do I reduce friction? And I think we ran into some really big roadblocks, right? If you think about lenders that were doing secured lending, trying to get appraisals done, like no one wanted an appraiser in their home while they're trying to sort of show, or even getting sort of signatures like on paper, things like that. Really, people were struggling with that. And I think those are areas where now where people might have been hesitant before, but where people now realize, hey, we need to get to sort of digital documentation. We need to get to digital closings, maybe even sort of doing that like through something like video chat. So those are the things that immediately come to mind, right? Where people realize, hey, we need to get onto that to fix that, because if this comes back again, if we have to shelter in place yet again at some point, we don't want to be caught with the same mistakes. Now, the other thing that I think this COVID crisis does, we actually do a whole lot more of these things, right? So for work, everyone is on these Zoom calls and team calls and Skype calls, and then socially, right? We're doing all these like happy hours and stuff like that. So people are getting more comfortable like being on a camera, and actually this has replaced, because it has to replace sort of the conversation. But I think that will also change how people feel about that. So I'm foreseeing a lot of innovation around video, and people sort of that might have gone to a branch before to sort of say, no, I want to talk to someone. That actually talking to someone now equates, after COVID, actually equates like, hey, I'm happy to go on FaceTime or on a Zoom chat. So I think there'll be a lot of change there in how we engage with our customers.
Excellent. Great stuff. Great stuff. I'm now going to pivot towards more of a risk-oriented topic. And Jonathan, I'm going to ask you to weigh in here first. Clearly, as a risk executive, your job is to manage risk, not only now, but always. And that's an important challenge for almost every financial services organization, especially when we get in unprecedented times like this. But can organizations like TitleMax and even more broadly in the industry balance the need of the consumer while mitigating the risk across all aspects of the customer lifecycle at TitleMax? So how hard is it to do that now, even with the threat of COVID-19 and the implications of what that's doing to financial services firms?
So it certainly presents some unique challenges in an economic scenario like this, just like it did back in the housing or the mortgage crisis, back in 2007 to 2011, kind of that time period, is you have customers that typically look like good credit quality customers when you pull their information from the credit bureau or from a data provider. But now you've had kind of this event that has occurred, where now even the data that you get in real time, you don't know if that really is reflective of that customer's creditworthiness or of their ability to pay. And so there's certainly some unique challenges as far as that goes. And trying to address those, I think, is probably, from a risk perspective, the biggest challenge that comes out of this. Now, how you offset that while still supporting your customer or supporting those that are in your portfolio, I think that's really regardless of kind of the economic scenario, that's really the job of a credit risk professional. You service all of your customers better by weeding out the bad players, the ones that try to defraud you or have ill intent in terms of when they lend from you. Because then as you keep your losses, your charge-offs down, you're able to lower rates, you're able to provide better service then for the remainder of your customers. And so I think that's something that is true regardless of the time period. There's definitely some unique challenges that we're seeing, as part of this. Another thing that I think of is that sometimes a strategy or an initiative that's meant to mitigate risk can also be changed and kind of enhanced to where it becomes actually a benefit to all of your customers. One of my prior roles at a company that was also primarily brick and mortar, we implemented some facial recognition software to be able to flag and identify customers that had previously stolen product from us. And when a customer would come in to a different store, even though they might change the identity information on their application, our facial recognition software would flag that, and it would trigger kind of a process that customer would be sent down to be able to handle that differently. What we found out is, because of the accuracy of the facial recognition, is we could identify really any returning customer. And so let's say a customer walks in the door, and in a retail business, there's cameras everywhere, right? And so many times you have cameras, aimed at the entrance or the exit. And so we found that there's an opportunity to identify a customer as they're coming into your store, have their account information pulled up at your terminal. So by the time they walk up to the counter, you're able to say, "Hey, Mr. Smith, good to see you again. Are you here to make a payment on your loan that you have open on such and such product?" And so what started as a way to mitigate risk became really an opportunity to better serve other customers. So I think there is a way to balance anything that is a credit risk initiative and use it as a way to support all of your portfolio.
Very interesting examples. Thank you for that, Jonathan. Rutger, again, given your exposure to a broad set of players in the industry, what have you seen on this front?
Yeah, so I think it is what is unique about this crisis versus the last one is that the last crisis was a crisis of the banking, of the financial system, right? And the financial institutions were sort of the bad guys, right? And people certainly do remember that. This time around, I think actually the financial institutions can be the heroes, right? Or can be the people that help folks out that are in difficult situations. So I think it is very much that balancing act between being there for your customers, but also clearly, like Jonathan said, you clearly don't want to risk the whole operation. So you want to be smart about what risk you take on. But yeah, there's certainly that sort of balancing act that needs to happen. And a lot of people that got impacted by COVID really, to no fault of their own, right? So they might sort of look at you very differently as a financial institution if you decide, for example, to sort of say, "Hey, I no longer want to lend because there's uncertainty," right? They might come back and say, "Hey, wait a minute, like I need you most now. So this is actually a time that I need you to be there for me." So I think that's something, that balancing act is going on in a lot of organizations, right? Where clearly the head of risk management will go to the playbook and sort of say, "Hey, we need to limit underwriting criteria. We need to double check, make sure that, right, we're not taking on irresponsible risk." But there's certainly also, I don't know, head of marketing or someone responsible for the customers that's sort of saying, hey, wait a minute, we also need to be there for our customers. And I think the other thing that's very unique now, and I think Jonathan hit on that as well, which is like the historical data all of a sudden is no longer very predictive, right? Because it's such a new crisis. So historical data doesn't really help you to build a model to forecast what's happening in the future. So literally you need to do it play by play and look at the data as it comes in and rapidly learn, right? So you need to build models that can rapidly calibrate and sort of pick up what's going on so that you can then make decisions based on that. But you can't sort of say, hey, someone has had this credit score for this period of time because they might be out of a job and they might be like in a situation that doesn't reflect that credit score at all. So I think that's certainly something that in conversations that I have, everyone is sort of talking about. We need recent data and we need to rapidly learn from it.
Excellent. Excellent. Jessica, last but not least, Capital One has always been known to be great customer service, but how are they balancing this delicate act between risk mitigation, customer service, and the consumer experience?
Yeah, so I think first of all, from the risk mitigation perspective, very similar as what Jonathan and Luca said. It's a very unique this time. It's and there's a lot of chaos in the market. Like the low income customer get a stimulus check and more than their previous income, and some white collars got laid off. And this is very different from our past experience. So I think from Capital One perspective, we are very good at the learning fast and apply those learning to the real business. So second thing is we also rely on our both lending and banking business to picture the overall customer financial situation so that we can better service the customer as they need and understand balance the risk. So besides that, we also have kind of a lot of like a fee waiver, like overdraft program that really help the customer go through this situation with the manageable exposure.
Very good. Very good. Very valuable insights. Thank you, one and all. I have one final question before we open it up to some of the audience's questions. We've talked about a lot, and certainly there are lots of opportunities and challenges in this world relative to COVID-19 and the digitization strategies. I'll start with you, Rutger. How do you perceive a positive outcome? What is the goal? What should be the goal for financial institutions by the end of this year, assuming we're coming out of this and we won't have to revisit these things? What should be the goals that our constituents in this industry should be focusing their eyes on?
Yeah. I think what is important is to basically be there for the customers, right, and to keep lines open with customers and allow them to borrow again, right. The right customers certainly be there for them so that they can, when they start to consume again, that there is a way to finance that. Because the key thing of how bad this is going to get is how quickly we can get the economy back up, right. And if lenders sort of pull back and don't lend any money to anyone, that doesn't sort of create the confidence for people to go out and spend, which is exactly what we need, right? So we need to make sure that everyone's still there. And I think there are a couple of very logical things that people will do when they get out of sort of the lockdown, right? One of them is sort of everyone who's cooped up in their house probably has identified 2 or 3 like home improvement projects. That'd be a great thing to go potentially borrow some money from, go do that. Or people that have put money on the credit card or had to borrow somewhere else, right? Doing some debt refinancing. That would be a good thing to do as well. And then I think people will look at like, hey, if this happens again, I want to make sure that I'm well prepared next time around, right? So maybe even think about, hey, how can I get some rainy day funds set up? Maybe I can do some saving. So making sure that you are ready if this happens again or if this virus comes back. So I think that's probably what people need to be focused on to keep things going so that we don't let this go, get the economy go down too far.
Very good. Jessica, would love your perspective from Capital One. At the end of 2020 and as we enter 2021, what will success look like relative to your digitization and innovation strategy?
So I will focus on more about the resilience. I think that's the business nature for the financial services. I think innovation is really, I think, behind the resilience. That is a key of the financial services. Because I would say 10 years ago, that Capital One that really grow is because of its resilience. So I think we are now entering a special economic recession that really exceeds the greater kind of a recession in the history. So the stimulus check can only mitigate negative impact from economic shutdown temporarily. And I know stock markets really behave opposite way of where the economy is going. So I think the long-term impact will become real when the things gradually get back to normal. So for financial services, I think that the top goal is to make sure you keep the resilience, like capital reserve, like have a very good risk profile in a portfolio. So this is the key to keep financial services continue the business and enable the innovation. Otherwise, without a healthy finance, there's no business that can do innovation going forward.
Very good. And last but not least, Jonathan, come January 1st, 2021, what does a successful 2020 look like for you?
Well, I think that, and I don't mean to be glib by saying this, but I think just being in business on January 1, 2021 is a success. And with everything going on, I think that if you can really withstand the storm and the turbulence that we're going through right now, then I mean that in and of itself is a success. I mean, a lot of people are really having to kind of make sacrifices even within their organizations. Our organization has had to make some very difficult decisions. We as employees are having to really step up and make personal sacrifices to ensure that the company succeeds. So I think just survival, and again, I don't mean to be glib when I say that, but I think just survival is a success. I do also want to say that I think Rutger's spot on when he says that are we still there for our customer, and will our customers look back and be like, man, when I was in a pinch, when I was in a really tight spot, TMX Finance, they were there for me, right? Our president of our organization has been very good about motivating us as employees to help us understand it's about our customers. That's who we're here to serve. At the end of the day, without our customers, we don't exist as a business. And so we need to be sure that we're serving their needs, and they can look back and think, hey, during that whole COVID mess, I had someone that was there for me.
Excellent. Well, thank you all for that. I'm now going to. That was very, very productive conversation, and I hope the audience got a lot out of that. And thank you all for weighing in as effectively as you did. I now have a couple of questions. I'm going to start with the first one. This comes from Brad Burnett, who is CMO, Chief Funding Officer at CreditSense. And this was for Jonathan. Can you elaborate on some of the new challenges you are facing post-COVID-19 related to fraud?
Yeah, I saw that question come in. I think that's actually a really good question. So in any scenario, so you really have two types of fraud, or two main types of fraud. Is you have your first party fraud and you have your third party fraud, right? So third party is the kind of the cellar dwellers that we think of that are stealing people's identities and sitting on a computer and applying for loans. And first party fraud is really an individual that walks into or applies for a loan that they have no intention of paying back, right? They're trying to defraud you and keep that money with no intent to pay. And so I think that's what would be classified as first party fraud. I think what we're seeing today is the fraudsters are kind of focusing or spending their time trying to take advantage of people in a COVID-related manner, right? So they're trying to, take advantage of kind of the fear and the panic. You see a lot of, fake emails that are going out and phishing attacks. Like, hey, you need to come in and log into your account. We have an important COVID-related message for you. Things like that. So I think what we're seeing is a lender that's coming in from an origination perspective is more first-party fraud. Right. So right now we've had a round of stimulus. So customers have gotten stimulus payments, and then we also have, as part of the stimulus legislation that was put in place, was the changes to unemployment benefits. Right. So if a customer has been laid off from their job, many customers are making more on unemployment than they were from their income at their job. And so what happens is at this point, if you have a customer coming in with a financial need, and they don't have stimulus money and their unemployment doesn't cover it, we have more red flags as it pertains to first party fraud, right? Is this a customer that's coming in really out of desperation or out of panic? And are they going to be able to, are they able to pay back the loan, and do they have the intent to pay us back? And so I think that's really what we're seeing right now from a fraud perspective, is people coming in, not third-party fraud, not people with stolen identities, but people that are coming in and trying to take advantage of this situation to just try to get money they don't have to pay back. And so I think that's what we're seeing as a challenge for us.
Excellent, thank you. Rutger, anything else to add on that front in terms of what you're seeing related to fraud in the industry more broadly?
Yeah, so clearly the challenge, if you go more digital, right, and you don't go face to face, then it's easier to hide and easier to use fake IDs and fake sort of personas. So certainly that is a downside, right? Clearly what Jonathan was describing, if someone's face to face, even if you have like facial recognition, but even if you can just size someone up, that's much easier to detect what's going on. If someone's sort of hidden behind a screen, that's much harder. Now, luckily, there are also some solutions that can deal with that, right? And there are, I think, solutions out there that help track how people put information in on websites, right? And that gives you sort of an idea whether someone is actually putting in the right information or potentially not the right information. And what we have seen is that some lenders have added additional questions to their application process to actually ask, hey, are you, to Jonathan's point, are you intending to pay back the money? Do you think that you're going to be able to do so? And seeing a response there can potentially give you at least sort of an indicator if there's something fishy going on or not. So there are some ways to deal with it, but it's harder, especially if you do things more digitally.
Excellent. Thank you for the question, Brad. I'm now going to turn to the next question from Lina Lee. Hi, Jessica. It's good to know Capital One is providing relief programs to assist customers going through financial hardship. Could you elaborate on how you evaluate the impacts of such programs on the business overall?
Sure. This is a good question. So Capital One is have a hardship programs like really deferred payment for our lending customers and also for our banking customers. So we have the overdraft, and then we have fee waiver for those customers. So overall, at this time, I think Capital One has a vision of mission of making banking for good. So we really allocate some expense to really for this hardship program, and we increase the level of that. But at the same time, it's also our opportunity to really evaluate the threshold of the fee waiver and really kind of to learn and test different kind of fee waivers impact to the customer loyalty. To the social impact. So this is I think is what we are doing to at the cost side and also at the revenue opportunity side for this hardship program.
Excellent. It's certainly consumers are impacted by this pandemic differently, more severely in some cases than others. So it is not a one size fits all, and you do need to be able to weigh these impacts and what the right financial hardship program or programs you should be offering consumers. So it's good to see that it's not a one size fits all. Jonathan, anything to add on that front? What you guys are doing from a hardship standpoint at TMX?
Yeah, I think we're doing the exact same thing. I mean, certainly you have financial, lenders are in business to make money. We're not philanthropic organizations as much as we want to help customers. But really, the thing to evaluate is what's the cost of losing a customer because you're not willing to work with them, and that's what we've had to go through. And yes, we're probably going to take a financial hit from making, deferring payments, trying to restructure loans that we have to help customers. But that financial impact is much less than if we just lose those customers altogether. Right. And so we're looking at it the exact same way that Jessica really described it.
Very good. Rutger, anything to add? Clearly, again, your exposure to the industry more broadly, there may be some things that we haven't covered yet.
Yeah, no. So I think it's good to have these programs in place. I think it's also coming back to sort of like the PR side and being there for your customer side. I think there's certainly, if you work with your customer and you're there for them, I think it's also not unfair to sort of say, hey, I know you're going through a hardship, but maybe you can still make a payment, or think about when we can make a payment again, right? I know, again, looking back at the last crisis, that some people started to go for sort of strategic defaults. They go like, oh, this is better for me to default on my loan. I think if you keep the relationship going with your customer and sort of say, hey, I'm here for you right now that you don't have income. But if that person gets reemployed, right, or is furloughed right now, comes back, I think it's also sort of then fair to say, hey, can we have a conversation? Is there some payment that you can make, right? And I think keeping that relationship, I think, will be very important to see how you work this out. And if you do right by your customers, I'm pretty sure that customers will remember that when the money start coming back in and they have to pay you again.
Yeah, that idea of reciprocity, I love that. That definitely is an important item to take away. Do we have any other questions, Liz, from the audience? Doesn't look like we do. I'm just going to ask each one of you, if there, in summary, if there's any advice or guidance that you can provide the audience here at this point in time. And I'll start this round. Just a summary of what you think folks should be doing from a digitization standpoint. Jonathan, you want to get us kicked off?
Yeah, absolutely. I think the way that we've been approaching it, even within my own team, and what I've been telling my people that work with me directly, is that you certainly don't want to abandon the fundamentals, right? Because we're going through this crisis, and so I think if there are things that have been priorities of the business and make sense to do regardless of time period, I think those are still things that we need to keep in sight, right? We can't kind of take our eye off the ball because we're being distracted by COVID, right? We still need to do the basic fundamentals. And so I think that, to me, is really the way that I've managed my teams, the way I've spoken to people that seem, to have, fear or uncertainty about what their role is going to look like in 6 months. And it's just, let's not worry about that. Let's worry about just doing the same things that we come to work and do, before this, right? We're here to add value to the organization. We're here to, provide a better customer experience. And so let's do those things. Now, is the business going to shift and move priorities? Absolutely. But that happens outside of COVID. I mean, I think we've all been in situations. I'm sure people have heard of the book "Who Moved My Cheese," right? Which is a very popular book amongst HR groups to have organizations read, which is just about changing expectations, right? And that's just a principle of life, right? Expectations change. Things can just move in a moment's notice, and I think this is, to me, it's a much bigger, broader impact from an economic perspective. But within my organization, we move priorities a lot, right? And so I think if we're just able to be flexible and agile to that, and respond to it accordingly, I think that's really the way to approach what we're going through right now.
Fantastic. Thank you for that, Jonathan. Jessica, how about you?
So I would say same. I have a kind of a risk management hat for the financial services first. First, keep the business survive well during this downturn time. And I was because a couple of years ago, in the past couple of years, Capital was already discussing what about recession happen, what should we do? So we have done a lot of time during a lot of things during the good time to keep the resilience. So I would say there will be a second phase coming when the economy gets better. So this is a great time if we look at any crisis has an opportunity side, to look at what the customer behavior will change, what's the kind of the opportunity coming in post COVID-19, and really when we make the resilience and also prepare for those opportunities to come and to grab that. It is my kind of insight and what I'm excited for.
Very good. Excellent. And Rooker, last but not least, we're ready to wrap up, but what's your advice for the folks listening in today and watching today?
Yeah, so if you think about your digital strategy, and if we all think about like what we don't have right now is choice, right? We have no choice but to sort of stay at home. And so I think that's going to be really crucial when we get out of this, to give people choice. And I think that's the basis for a good digital strategy is for it to be omni-channel, right? I said that earlier, to sort of say we're not moving everything online. That's not how a good digital strategy works, right? It needs to be an omni-channel strategy where you give your customer choice, because that's the one thing that we've been deprived of for many weeks now, right? And I think that will be something that customers will appreciate more and more, to be able to make choices, and they probably will go with companies that give those choices to them.
Very good, very good. Thank you for that. Since we don't have any other questions posted, I'm going to give a few minutes back to everybody. But first, I do want to thank Jonathan, Jessica, and Rutger today for your time and your insights. I found this to be a very, very compelling discussion, and appreciate all your insights that you provided today. So thank you for that. We know we're all very, very busy, and to devote an hour to this, or close to an hour to this, is much appreciated. I also want to thank everyone for joining who did tune in today live for this panel. We hope you found it insightful. And last but not least, I just want to wish everybody a very happy and safe Memorial holiday. It's upcoming. I know we're all probably looking forward to that, but enjoy yourselves, be safe, and be well. And again, thank you for tuning in. We appreciate it.
Thank you.
Thanks, Brandon.
Have a good day. Take care.
Thank you.
Bye.